Hello everyone. I, Kamini Shah, thank UGC HRDC of Gujarat University for giving me an opportunity to connect with you all today and deliver my session on emerging transformations in finance. I thank Professor Dr. Jagdish Joshi sir, Director UGC HRDC Gujarat University. The teamwork and the performance in successful planning and execution of refresher course or any such programs like FDP, orientation programs, short-term training programs. All these programs are indeed noteworthy so far as its participation in the programs, the quality of resource persons selected for the programs, and the benefits or the learnings taking place from these programs are really commendable. Few things which I know about the UGC HRDC Gujarat University which are worth mentioning over here is more than 100 courses with about 4,000 participants have been successfully completed by now by the HRDC Gujarat University. Online refresher course in India in the year 2018-19 with the participation of 2,500 participants is really commendable. Even I know that the journal of UGC HRDC is care-listed. HRDC of Gujarat University has MOU with UK and Canadian universities, and that gives the opportunity of international exposure to the participants or whoever are associated directly, indirectly with the HRDC Gujarat University. One unique thing which is worth mentioning is the practice of putting video feedback of the participants on the website is really we can say we can appreciate this gesture because that gives immediate information to the would-be participants about the program quality and the learnings possible by associating themselves with the Gujarat University HRDC. With this, I'll begin with my session on emerging transformation in finance. I would begin with a small video clip. This talks about finance predictions by 2025. What does this have to do with the future of finance? So digital is the buzzword, and what this digitization will bring to the field of finance industry, and those who are going to be directly or indirectly affected due to these changes, that these predictions have been shown in this video clip. Transactions will be touchless as automation and blockchain reach deeper into finance operations, and we are experiencing this change. It has already started and we are already part of this change. With operations largely automated, finance will double down on business insights and service, and success is not assured. So each and every small task or big task in finance, accounts, the IT has taken over. And now, not only IT we can say, but AI, artificial intelligence, and blockchain, that has become almost, it is going to be inevitable. Nobody will can afford to ignore this major changes. Finance goes real time. Periodic reporting will no longer drive operations and decisions, if it ever did. We are actually used to with we were rather used to with periodic reporting, quarterly, half yearly, yearly, like this. Even the stock market, the Bombay Stock Market, BSC, Bombay Stock Exchange, we all know the ring trading and all that, but now it is just a mobile click away. It's real time trading is taking place, and we all are doing that. Self-service will become the norm. Finance will be uneasy about it. Of course, finance is considered as very, very delicate thing for personal or professional life, for the businessman or for us as an individual also. But everything in finance, the self-service has become a norm. We try everything on our own. We trade during the transit, we place an order, we buy things, online shopping, payments, everything on our own. We have been empowered. Actually, technology has empowered us. New service delivery models has already started emerging. Robots and algorithm. In the lecture itself, we'll see the HDFC era, what role it plays, the chatbot. ERP. The traditional ERP is replaced now by the new one. The proliferation of APIs will drive data standardization. Workforce and workplace. Employees will be doing new things in a new way. The lockdown has made work from home now new normal. Similarly, employees, they have the CFOs sometimes are not comfortable with what employees have their altogether different way of performing that task. The workplace is not restricted to the offices. From anywhere, employee can contribute to the value addition of the organization. So this small clip talks about the transformations in finance a lot. Now let us look at another such major transformation is due to fintech. And as you can see here, 23 out of 100 unicorns globally are fintech. These 23 companies cumulative valuation is around $400 billion. And compared to this, JP Morgan is the largest bank globally by market capitalization, around $500 billion. In India also, fintech unicorns are valued at around 60 billion US dollar, which is more than the capitalization of or market cap of largest bank in India, that is SBI. In the next slide, if you look at this chart, it shows that how large the Indian opportunity can be. Of the 1.4 billion people in India, almost half have 4G connections. It means on an average, two individuals in the household have 4G connections. Half of the people who have 4G connection pay digitally. You can see here. And 1/3 of digital payments here you can see 1/3 of the digital payment users do financial transactions online. Despite this, if you look at this right hand side, the metrics, finance metrics, we have still less than 100 million mutual fund portfolio, less than 26 million NSE active demat account, less than 60 million credit cards, less than 50 million lives covered under retail health insurance. And I think that's the opportunity, because large unmet credit demand is there, and that's where the business opportunity, employment opportunity is there. On the next slide, as I already said, unmet demand for insurance exists in India for a long time now. It is difficult and costly to bridge this gap through traditional way of doing business. In addition, it will take decades for financial products to reach deep rural areas, but multiple things have changed on the supply side, which will help bridging the demand supply gap. Firstly, as it was highlighted in the prior slides, more than half of the population has internet access, and amount of data usage has grown significantly in the last few years. This internet access has enabled people to get more financially aware, share knowledge through YouTube, WhatsApp, and other modes of digital communication. As you can see in this slide here, the most importantly, the public infrastructure, Jan-Dhan, Aadhaar, UPI, it has played a pivotal role in simplifying access to digital financial transactions, or rather digital financial services. In a way, internet plus digital infrastructure has enabled companies to put whole gamut of financial services in an entry level smartphone. Everything is just a mobile click away. Next, because of the high digital penetration and supply side support by way of digital infrastructure, fintech has grown at a rapid phase across the consumer financial journey, namely payments, lending, insurance, savings. Across these subcategories, we have seen tremendous innovations both in manufacturing as well as distribution. For example, payments. We have government-led innovation in the form of UPI, private sector-led innovations in the form of, we can say, the cards, QR codes, point of sale machines, payment gateways. Similarly, lending, which is the largest profit pool in financial services, we have seen more than 1,000 fintech trying to disrupt various categories, building ability to distribute lending products to more people at a lower cost. These are few of the examples. In insurance and savings also, we have many companies offering online insurance and saving products like mutual fund, equity with the least hassle. These companies which act as an agent or broker offers wide variety of choices to the customer with good consumer experience or buying experience with online products. Now coming to the next slide, as you can see, the disruption driven by accessibility, experience and efficiencies. Fintech have grown at a rapid pace and the growth has only accelerated. Was covered from, you can say, minuscule digital payments. We have now $800 billion of UPI transaction, more than that in fact. More than 75% of new accounts open digitally or discount broking app, through discount broking app. Plus we have increasing number of mutual fund inflows coming through digital channels. And this shift is led by specific value proposition that fintech are offering, namely material improvements in accessibility, simplicity and lower cost. Suppose we take the example of mutual fund buying process. A decade ago, most of the mutual fund buying journey was largely driven by agents coming to your house, filling up the form, investor giving them a check, and then agent will go to AMC or RTA office to deposit. The investor will get allocation as the check clears in 2 to 3 days. Now fast forward this to today. What you have to do is install an app, do just 1 minute KYC, transfer funds through UPI, and in one click your mutual fund buying process is over. Also think about opening a bank account even decade ago. You have to go and visit a bank branch, share few documents. I still remember you have to carry 2 passport size photographs and bank would do the entire processing and your account will be activated in probably 3 to 4 days time. Now again fast forward this to today. You can open a functionally operating bank account in less than 10 minutes, and that too without going to the bank. Person will come to your house. All you need is a smartphone with camera and your Aadhaar card. These improvements are unbelievable, tremendous. Now coming to the next slide. If you see how fintech has evolved in India over a period of time, if you take few steps back and map India's fintech evolution over a time, you see that first 15 years of this millennium was a lot about payments. Interestingly, UPI came much after that. If you look at Paytm, BillDesk, Pine Labs, all payment companies that were founded in this period, of course, there were some non-payment companies like Zerodha, Policy Bazaar was also founded during this period, and they saw a large internet opportunity. And in this next phase, we have seen e-commerce getting lot of funding. Maybe you can say venture financing or private equity or angel investing. They were the major investors for a long time. We had GST, we had demand coming in, and we also had a cheap UPI e-commerce funding, and even formalization of MSME due to GST opened up MSME financing market that was fairly untouched by the lending institutions. This period marked founding of a large number of new age financials that would lend to newly formalized economy. This led to market expansion and growth in profit pools for the organizations. Companies have already created massive base of digital transactions. We now see many companies that are offering some value added propositions, like if you are on ATM. Now if you are on Paytm, then Paytm can offer you credit even in the form of saving products like insurance, mutual fund. The strong financial infrastructure enabling quick credit even to the bottom of the pyramid is now possible. Another interesting part, if you see, there has been an evolution horizontally as well as vertically. The companies like Paytm, which were originally a payment company, have broadened their horizons, their canvas, by offering horizontal services across financial ecosystem. They are financial supermarkets actually. And on the other hand, there are companies which have stayed focused on their own way of doing business. For example, Policy Bazaar. They are offering same products and they have focused on being more efficient on their offerings only. Now coming to the next slide. It talks about monetization models in fintech. In the fintech business, there are broadly three categories in which the fintech falls. First is fee or flow model. These are the companies which charge commission on the stock of your money or on the flow. Somebody like Policy Bazaar that takes commission on the premium it generates. There are companies which give you loans which charge underwriting commission, or you can say margin or net interest margin. They take a percentage interest rate on the loan disbursed to you. And the third categories are SaaS and PaaS companies, which charges fees for the software they provide. SaaS means software as a service, PaaS is platform as a service, and they charges fees for the software they provide. Now note here, you should note that there are no companies which is only one or two of this, like offering having one or two of these monetization model. There are a lot of companies which provide combination of all these services, and something like this Turtle Mint, which makes revenue from its software offering and from commission on the business source by its partner agency. The opportunities in payments in online as well as offline. If we talk about online payments, the UPI driven B2C, it's not very monetizable. Payments through wallets, cards, that do attract a fee, and expect payments to have small profit pools if it is online. Gateway aggregators see strong competition and shrinking margins. And if we talk about offline payments, dominated by players like Pine Labs, M-Swipe, that have point of sale machines and underlying tech. We all are using QR codes, and that's why we know it has become ubiquitous. And nowadays this BNPL, buy now pay later, that has become very popular. So who will win here? Those who can offer smooth user journey, ease of use, convenience, low failure when it comes to payment, security, assurance of security, those who have their own brand building and ability to provide, as we discussed, BNPL, buy now pay later possible option, and merchant credit. So highlights of 2021, fintech in 2021, and what we can expect in this year 2022. Some of the highlights of 2021 are, you can say, $9 billion raised by fintech, which is up 200% year on year. 12 new unicorns. PayU buys BillDesk for $4.7 billion. Paytm, Policybazaar IPO we have seen. And what we can watch out for, this funding momentum will still continue. There will be further consolidation through mergers and acquisition between, you can say, the traditional players and new players, that is fintech companies. More IPOs, neobanks, and buy now pay later, it will grow further, and there we are expecting regulations from the regulators, digital currency regulations we are waiting for, and that's why we started with fintech, which is bringing major transformation in the field of finance. And what this millennial Indian wants, we all know this, India is expected to become the youngest country by 2022 with an average age of 29. And three major trends which are worth observing is, one is sharing economy, sharing workplace, sharing residential accommodation, sharing vehicles. All this is a new norm. These millennials do not want to invest much in buying such properties and all that. They have no problem in sharing workplace and residence even. Digitization we all are experiencing everywhere, and growing consciousness in two aspects, that is, even millennials are focusing on, while selecting their profession, they are focusing on well-being and social good also. So making a workplace and workforce ready for the future involves investment in time, people, technology. So I think the first what we talked about is, everyone, you must agree that yes, it is the time where the fintech brings major changes or transformation in the finance ecosystem. Another such major transformation is neobanks, or you can say digital banks, which is the future of banking. Actually, neobanks are those banks which are 100% digital banks without any branches. And they are called fintech firms which offer banking as a service, ranging from faster accounts, mobile deposits, free debit card, credit cards, payments, and many more without the burden of physical network. Look at this. The YONO app of SBI is considered as, it is as good as neobank, bank within a bank. The Dinesh Khara, chairman of SBI, said that when it comes to digital payments, what gives us insights about customer behavior is what the customer is spending on, which opens a lot of opportunities. And he also talked about banking mobile app YONO among other digital transformation in the sector. And he talks about YONO that it has gone beyond payment transactions and is transforming itself into a bank within a bank. And what they feel, the participation is almost increasing on a daily basis. 30,000 savings accounts are being opened daily in a seamless eKYC process, which is end-to-end digital. In this way, the platform is becoming more of a bank by itself in many aspects. That is a bank within a bank. And he believes that it is comparable to many of the banks in the country also. And they are planning to revamp this YONO app. So the app itself can be a separate digital bank. Now this talks about the neo-banking, which is the future of finance, a lot. But as you can see, in India, neobanks are not 100% digital. That's why the YONO app or Kotak 811, it is considered as good as a digital bank or neobank, but they are not in pure form digital bank. Globally, neobanks are entirely digitized, but still we do not have regulations for 100% digitized bank. The second wave came in the form of what we prefer to today as neobanks by startups. That is, these are all fintech firms: Neo, Open, RazorPayX, Yellow, Instant Pay, PayZillo, etc. The opportunities and challenges of this neobanks, you can say they offer a lot of opportunities in the form of low cost structure, that is no monthly fees, no withdrawal cost, higher rates on savings and fixed deposits than traditional banks, simple and engaging mobile experience, near real-time services for account opening, payments, balance checking, opening and redeeming time deposits, etc. 24/7 support through advanced chatbots. Most neobanks provide international payments at interbank rates through various banking and payments partners. One platform for linking multiple accounts, apps, services on neobank platform. But at the same time, it has challenges also, like narrow range of product offering. So we cannot expect car loan and home mortgage or such business services. The main drawback of neobank is they can't offer in-branch service, and some people are comfortable with that only. They have obviously the concept is very new, so operational inexperience is obvious, and as they do not have the physical existence, the regulatory and compliance is definitely going to be very stringent. So some of these, you can say, noteworthy features of neobanking: that fast account opening, free debit card, international payments, instant payment. This one that may be more attractive to millennials, like cryptocurrency. Some neobanks offer opportunity to open an account in cryptocurrency, and some neobanks even offer possibility to open account in multiple currency, and transfer within these accounts are instant and uses the market live rates. So that may be, you can say, attractive feature of neobanking. The European neobanks, I mean, because globally there are 100% digital banks are there, and that's why this slide I have kept, that European neobanks landscape. In almost 2 years, the level of funding has been multiplied by 2.9x, from about 750 million plus in 17 to 19 2.2 billion, and by this 2022 obviously the figure will be much higher. So what they offer: neobanks with banking license and a proprietary backend, where asset light platform is possible, full service in-house platform is also possible, and these are all the players, these are all neobanks offering these services in this category. Neobanks provide digital front end for B2C and for B2B also, and these are the players. Like these, for B2C they target young people and easy access to basic banking services, and millennials want that. SMB focus and solo entrepreneurs focus here by the neobanks. Another such major transformation is algo trading. What is it? It is, you may call it automated trading, black box trading, or algo trading. And it uses a computer program that follows a defined set of instructions to place a trade. It's basically a program which trades on your behalf. And that's why what will happen when machine is placing an order, there is no place for human emotions to play a role in trading in the securities. The trade can generate profits at a speed and frequency that is impossible for a human trader. And what happens here? The defined set of instructions are based on timing, price, quantity, or any mathematical model. Apart from profit opportunities for the trader, algo trading renders markets more liquid and trading more systematic by ruling out the impact of, as I said, human emotions on trading activities. One small example is given here, that is, suppose there may be an instruction given or programming done that buy 50 shares of a stock when its 50-day moving average goes above 200-day moving average. Now we do not need to keep a watch when this happens. Once this instruction is given to the computer, the trade will automatically take place. Sell shares of the stock when its 50-day moving average goes below the 200-day moving average. So this happens automatically. The computer program does this, and that is the biggest advantage. Okay, we can focus on our own things once we have given instruction to the computer through algo trading. So in algo trading, you can say the automated, it's arbitrage process. Arbitrage word, everybody, I mean those who are into finance, teaching finance, they are aware that Modiglani and Miller has given this concept of arbitrage, where the price movement between two stock exchange, two markets, we can take advantage of same security price movement in two different stock exchanges. Say for example, at present it is possible between NSE and BSE. And as you can see here, algo trades account for over 43% of India's stock market turnover. And in US, where retail investors also engage in algo trades, 90% of the turnover is from automated system, and global average is 75%. SEBI was among the first regulators to issue a discussion paper proposing strengthening of rules on algo trading last year. It produced a set of 7 proposals aimed at creating a level playing field between institutional investors using co-location facilities offered by the stock exchanges and retail investors. Some of the benefits of algo trading, like trades are executed at the best possible prices. Trade order placement is instant and accurate. We do not need to keep a watch. Trades are timed correctly and instantly to avoid significant price change, reduction in transaction cost, simultaneous automated checks on multiple market conditions possible, and reduced risk of manual errors due to, you can say, human emotions or decision making or whatever. Algo trading can be back tested using available historical and real time data to see if it is viable trading strategy. Reduce the possibility of mistake by human traders based on emotional and psychological factors. Such other transformation is blockchain. So before we talk about blockchain, let's see a small clip on blockchain.
मोबाइल फोन से आप अपने दोस्तों से सीधे बात कर सकते हैं।
मोबाइल फोन से आप अपने दोस्तों से सीधे बात कर सकते हैं।
आपको ऑनलाइन
पर अगर इसी मोबाइल फोन पर आपको ऑनलाइन कुछ खरीदना हो तो आपको एक बिचौलिए की जरूरत पड़ती है जो विक्रेता को गारंटी दे पाए कि आपने पैसे दे दिए हैं। पर क्या ये मुमकिन है कि एक क्रेता और विक्रेता आपस में सीधे समझौता कर लें बिना किसी बिचौलिए की सहायता के?
ऐसा मुमकिन
ब्लॉकचेन नामक एक नई टेक्नोलॉजी ऐसा मुमकिन कर रही है। ब्लॉकचेन को आप एक वितरित डेटाबेस यानी डिस्ट्रीब्यूटेड डेटाबेस मान सकते हैं, जो कि एक दो कंप्यूटरों पर नहीं, हजारों लाखों कंप्यूटरों पर प्रतिलिपित है। ब्लॉकचेन का हर एक कंप्यूटर हर एक रिकॉर्ड के पूरे इतिहास का वर्णन रखता है। यह डेटाबेस एनक्रिप्टेड है, यानी हर एक रिकॉर्ड गोपनीय तरीके से दर्ज किया गया है। ब्लॉकचेन फॉल्ट टॉलरेंट भी है, यानी अगर इस सिस्टम में कुछ कंप्यूटर खराब भी हो जाते हैं तब भी यह सिस्टम ठीक तरह से काम करता रहता है। ब्लॉकचेन डेटाबेस एक सार्वजनिक बही खाता यानी पब्लिक लेजर है, जिसमें कोई भी नए समझौते या रिकॉर्ड को दर्ज करने के लिए कई सारे साझेदारों की स्वीकृति की जरूरत पड़ती है। इसको हैक करना बहुत मुश्किल है, क्योंकि ऐसा करने के लिए हैकर को एक ही क्षण हजारों कंप्यूटरों को एक साथ हैक करना पड़ेगा। यह कारण है कि हम ब्लॉकचेन को एक सुरक्षित टेक्नोलॉजी मानते हैं। ब्लॉकचेन का पहला प्रयोग हुआ था 2008 में, जब बिटकॉइन नामक एक डिजिटल मुद्रा का आविष्कार हुआ। बिटकॉइन मुद्रा किसी देश, सरकार या बैंक द्वारा नियंत्रित मुद्रा नहीं है, यह एक डिजिटल मुद्रा है। अधिक जानकारी के लिए आप बिटकॉइन को गूगल कर सकते हैं।
प्रयोजन के लिए ही नहीं,
केवल मुद्रा या पैसे से संबंधित प्रयोजन के लिए ही नहीं, ब्लॉकचेन का प्रयोग कहीं भी हो सकता है जहां पारंपरिक रूप से विश्वास, भरोसे या गारंटी के लिए एक बिचौलिए की जरूरत है। जैसे वह सभी सौदे जिनकी आज नोटरी पब्लिक या किसी सरकारी संस्था को पुष्टि करनी पड़ती है। मान लिया जाए कि आप एक मकान खरीद रहे हैं। आप चाहेंगे कि इस सौदे को सरकारी रजिस्ट्रार के यहाँ दर्ज किया जाए ताकि आपको एक सरकारी दस्तावेज मिले जो साबित करे कि आप उस मकान के कानूनन मालिक हैं। पब्लिक रजिस्ट्रार केवल इस सौदे का एक सबूत दे रहा है और ऐसी संभावना है कि भविष्य में पब्लिक रजिस्ट्रार का काम ब्लॉकचेन टेक्नोलॉजी कर दे, क्योंकि उसमें दर्ज सौदे की भी उतनी मान्यता होगी जितनी आज रजिस्ट्री सर्टिफिकेट की है। सार्वजनिक होने की वजह से इसमें घपले की संभावना भी कम होगी। ब्लॉकचेन टेक्नोलॉजी के उपयोग के कई और संभावित उदाहरण हैं, जैसे किसी सरकारी योजना के अंतर्गत यदि एक गरीब आदमी को कुछ वेतन मिलना हो तो ब्लॉकचेन टेक्नोलॉजी से उसको वह रकम सीधे उसके मोबाइल फोन पर दी जा सकती है। या अगर किसी प्राकृतिक आपदा से ग्रस्त लोगों को नुकसान भरपाई करनी हो तो उनकी सहायता राशि सीधे उनके मोबाइल फोन पर दी जा सकती है। इससे भ्रष्टाचार भी कम होगा। शिक्षा में भी ब्लॉकचेन का इस्तेमाल हो सकता है। कागजी डिग्री के बदले छात्रों को ब्लॉकचेन आधारित डिग्री दी जा सकती है। इससे जाली डिग्री की समस्या का भी समाधान हो सकता है। ब्लॉकचेन उन टेक्नोलॉजी में एक है जो 21वीं सदी की अर्थव्यवस्था में बहुत बड़ा परिवर्तन लाने की क्षमता रखती है। आपको ब्लॉकचेन टेक्नोलॉजी में क्या नया हो रहा है, इस पर नजर जरूर रखनी चाहिए।
So I hope everyone has understood in a very simplified language what blockchain is. It's a technology that works by means of peer-to-peer internet-based distributed ledgers, and that do not require any central authority or any third party to act as intermediary. That's why it is known as distributed ledger system. It is cheaper and faster. It does not require any intermediary. And two of the most important characteristic of blockchain, that it cannot be controlled by any individual, and it has no single point failure. So three fundamental components this blockchain has is a transaction register, and a system that verifies and stores the information. And in financial markets, how this technology is used, you can see over $1 billion was invested in capital markets related blockchain projects in 2017. Over 14% companies in the capital market sector report having moved on to the successful deployment of at least one blockchain solution. Where is it applicable? In clearing and settlement, payments, reporting and compliance, digital identity, transfer of instruments. So everywhere it can be utilized, we can say. This is one very good example, that is ASX, the 16th largest financial exchange in the world, is to replace its chase clearing and settlement system with distributed ledger technology, that is blockchain based alternative. And the new system is being developed with digital asset holdings, blockchain consultancy, and ASX holds a stake in it, and it is expected to go live in this year only, 2022. These are some of the, you can say, applicability again of blockchain for business, that is for, let's say, smart contracts, that is business terms embedded in transaction database and executed with transactions. We'll see this. Then append only distributed system of record shared across business network for maintaining privacy and for consensus. All parties agree to network verified transactions. It helps in getting this. Some of the, you can say, the players in the industry and other stakeholders who have already started using blockchain technology, that is ICICI Bank and Dubai Emirates, successfully executed transaction in international trade finance and remittances. Yes Bank implements multi-nodal blockchain solution for Bajaj Electricals. Mahindra and IBM develop blockchain solution for supply chain finance. Axis Bank uses Ripple network for a successful remittance transaction. Financial consortium like SBI, India's first blockchain exploration consortium, launched for banks for improving fraud management. Indian insurance firms come together to form informal consortium on blockchain. Regulators like RBI and IDRBT released white paper on impact of distributed ledger technology and impact on Indian market. IRDA, the insurance regulator, focusing effort to gain better understanding of this technology across all insurance verticals. Market utilities like Indian banking giants and NSE test blockchain technology KYC. Fintech startups came together to form the Digital Asset Blockchain Foundation of India. On government front, state government like government of Rajasthan, they organize hackathons and all to understand this technology and make it more popular and acceptable among people through with a theme like skills for employability. Andhra Pradesh become first in Asia to introduce blockchain technology to fight cybercrime. Such other technology major transformation is robotics process automation. Again, we'll see a small clip because examples explain things immediately. Then these words only, and that's why the small clip. Let us see this clip.
HDFC Bank has been a pioneer in introducing digital innovation in the banking sector. Today, we proudly unveil yet another milestone in the history of Indian banking. Welcome to HDFC Bank. In our efforts to drive digital innovation in our banking services, we are today introducing a new age technology. Would you like to take a guess what it could be?
How about technology that gets me a loan in a few seconds?
If I could do something with my smartwatch, like make transactions.
Okay, what else could it be?
Scheduled payment every month?
Through an
My kids. Is it possible to pay all fees through an app?
Do you think you can give me a loan in 5 seconds?
Well, I'm a writer working at home.
Okay.
So would it be possible for the technology to come?
HDFC Bank already has introduced these digital innovations. So how about we go inside and find out what surprise HDFC Bank has in store for us?
Yeah, let's do that.
Sure.
Let's go. Our friendly humanoid era is capable of vocal interactions.
You may proceed to counter number 10 for fixed deposit. It's been a pleasure helping you.
Contemporary design and human form makes era smart and friendly. Choose the banking service you require or make any number of requests. Era will always be there to guide you.
Select the Take Me There button so I can guide you there. Please follow me.
Its state-of-the-art motion sensor technology will lead you to the right service counter.
You have arrived at your destination.
The surprise that we have unveiled today is not just a humanoid. It's a major milestone in India's banking sector. With artificial intelligence and free mobility, HDFC Bank's era is the next step in digital banking.
So all the, you can say, routine and repetitive task will be taken care of ERA, that is chatbot. What it involves? The use of bots or computer application to automate routine and repetitive tasks that are otherwise performed through human intervention. So we can save lot many man hours for other important tasks instead of routine and repetitive tasks done by the people. So RPAs are configured in a way to perform set of operations following predefined process and work on a template based input system. These are the characteristics. All the tasks are consistent with the same steps being performed repetitively. That will be taken care of by chatbot. The process is template driven and there is a set of predefined rules. For accounts and finance, the functions like accounts receivables, accounts payable, payment processing, customer service and grievance management, resume screening, pre and post payroll processing, tax processing, these are just few names mentioned here that can be easily done by a chatbot, and no human intervention is required. It's time of even one major change, that is open banking. We are familiar with the closed banking where bank will not share data, customer data with anybody, but in open banking bank will share customer data with the third party, like with their fintech collaboration, for giving information to other lenders about the financial strength of a person, lending and credit platform, payment services, cross industry partnership. That is with the, of course, with the permission of the customer, client. So we can say the future is IoT, cloud technology, big data, mobile technologies, artificial intelligence, robotics, augmented reality. Let's see one more clip which is again very interesting. It explains about what is this new technology, augmented reality.
Show me skirt. Show me blue. Yes.
See how easy it is to take trials. I have taken such trials for Tanishq jewelry. It's very convenient. So these are the major, you can say, the trends, fintech trends like biometric security, AI, machine learning, open banking, big data, regtech. Regulatory compliances are possible through regtech. Gamification, ESG focused fintech, embedded finance. These are the trends, or you can say we are already part of some of these trends and going to be part of or become habitual to use this. There is a boom in these, we'll see this and that, will explain a lot about it, like 5 major trends to watch out for. The embedded finance has taken the financial world by storm, and its growth is likely to continue this year also. And the term is used to describe the seamless integration of financial services into a traditionally non-financial platform. One example of that, if I give, is a key part of embedded finance is this: buy now, pay later, which is well on its way to becoming mainstream in 2022. The companies which are offering this are this. Even when we pay Google Pay, WhatsApp Pay, these are also embedded finance. Digital one-stop shop solutions for customers, forex solution for SMEs, traditional financial institution exploring cryptos and NFTs, platform as a service, and so many such things that is going to be part of our routine life. And that's why we all have to adapt to the changes, adopt it, welcome the changes and adapt. Be expert in using those changes, in learning, relearning, and of course unlearning few things, so that we become future ready. It's more a journey than a destination, and of course continuous learning, updating, critical thinking, that is inevitable. I just came across this. Being qualified is so old fashioned now. What is required is stay relevant, and then only we will be able to enjoy, be part of it, and get fruits of these major transformations taking place in the field of finance. So with this, I end my session by expressing my gratitude to HRDC Gujarat University, Professor Jagdish Joshi sir, Dr. Mamta Brahmbhatt madam, coordinator of this refresher course, organizing committee, and all participants of refresher course. And of course, how can I forget the dynamic Vice Chancellor sir, Professor Himanshu Pandya sir, under whose dynamic leadership the Gujarat University is progressing like anything. Thank you one and all. Thank you all.